So now, progress. The progress is one of the most important attraction that moves the humanity. It is the very essence for which the entire humanity is striving for. But is any progress a real progress until sustainability is incorporated in it? And what is sustainability? Is it about doing less harm or doing more good and creating a future where the progress and responsibility walks hand by hand? Definitely, we would all have to agree with the latter. And even in the case of wealth creation, we must seem to say that it needs to be sustainable. And now, what is a sustainable wealth creation? The creation and preservation of financial assets and resources in a way that balances the economic growth, environmental responsibility, and social well-being. So, my dear people, it is time for us to be exploring the role of sustainable wealth and impact of investing in India's financial market. Joined by a panel of distinguished speakers moderated by Mr. Zeeshan Nofil, the respected director for Meta X Technology. He's also a startup mentor and he places his emphasis on human-centric tech. Thank you so much for joining with us, sir, and kindly be seated. Now let us invite a respected faculty at the National Institute of Securities Market who has over a decade of experience. And his core areas of expertise include ESG and corporate sustainability or business statistics using Python and quant technical analysis. Let us all invite onto the stage Dr. Mohd Miraj Ananth. Kindly join with us, sir, and absolutely delighted to have you here with us. The next to be joining on this invigorating session is Mr. Hemendra Mathur, who possesses over 12 years of management consulting and investment banking experience in the food, agricultural, business, retail, and consumer goods industry for corporates as well as the central and state governments. Thank you so much for joining with us. And now let us invite Mr. Emmanuel, who is bringing knowledge from over 40 years with his diverse experience in agriculture, rural credit, micro enterprise finance. He's an investment director at Caspian, a social impact investment firm, and also holds multiple positions in his professional capacity that focus on social and environmental impact. What a great pleasure to be having you here with us, sir. And the last to be joining with us on the stage, we have Mr. Ananth Aravamudan, the Honorable Chief of Strategy and Sector Lead for Climate Action and Agriculture at Villgro, a leading social enterprise incubator and impact investor. He has over 29 years of experience in social enterprise sector and corporate world and is also an adept speaker, and we are all thrilled to be listening to the insights that you are bringing on to the Money Conclave 2024. Over to you, sir.
Hello everyone, good afternoon. I welcome everyone to this session, dignitaries on the dais and dignitaries off the dais. My name is Zeeshan Nofil and I will be moderating this session today on the role of sustainable investments. So without further ado, I think we have about 35 to 45 minutes. The way we want to do this session is by, for me, asking certain questions to the panel, distinguished panel over here. And then we will have about 5 to 10 minutes of question answers from anyone that you want to ask questions on this. So, the way I'd like to put this out is the way sustainability is heard or accessed in the market. There's a lot of buzz about sustainability. Is it only electric vehicles? Is it only agriculture? Is it only farm tech? Is it only agri-tech or rural tech and so on and so forth? So my first question to the panel goes out, as to what do you think sustainability is? How do you define it? What is impact according to you from an industry perspective?
Shall I start? Thank you so much. It's wonderful to be here at Kochi and seeing this audience here. I represent Villgro, which has been in the space of social entrepreneurship for the last 23 years. It's very interesting as to the question of what is sustainability. For us at Villgro, sustainability really means two things. Firstly, is the business model itself sustainable? Is that something that can scale up and create more impact in society? And second, of course, is the environmental sustainability part of it, which is to say whether the work that is, or the product or service which is being promoted by the enterprise, is that creating a positive impact on the environment. And I would like, because the theme of this conclave is about investment and it's about impact, it's about basically investment and it's about money, I would like to say very strongly that investment and impact can create this sustainability. And there is, as many of you know, a very up and coming field called impact investment, which shows that investments can bring about positive change both on society as well as on the environment.
Good afternoon, everyone. And I represent Caspian over here. To us, of course, sustainability of business is one non-negotiable dimension. But sustainability on the environmental front largely is a matter of minimizing adverse impact in the business that one operates. It could be in terms of reducing the carbon footprint or reducing waste, reducing water use, any resources that are in short supply of critical resources, how do we reduce those and improve efficiency? We have a large component of our portfolio in the renewable energy space, in electric vehicles. Even on the agriculture side, we have a significant business. And we look at things like what's the reduction in waste that is happening, recycling byproducts and these sort of things. On again the solar energy side we are present, and also in terms of things like batteries and other technologies that reduce the dependence on non-renewable sources of energy. So these broadly are the spaces we work in.
Good afternoon, and thanks to Money Conclave organizers for hosting this wonderful conference and inviting all of us. It's really great to be here in the city of Kochi. To answer Zeeshan's questions on impact, I think Emmanuel and Ananth have covered sustainability aspect. So let me just hop upon impact. So it's a very sort of personal definition. I don't know how true is this. But to me, impact in a country like India is essentially sort of positively impacting at least 1 million lives, whether it's more income, more saving, better living and all that. And if it comes in areas like, let's say, climate, livelihood, education, health, agriculture, it's even more sweet, because those are the areas which are still need a lot of impact to be created. So that to me is the impact that sort of needs to be demonstrated. And by that definition, I would say even Ola, Uber are great impact stories which have created jobs for millions of drivers and made them financially independent. I see a lot of youth in this room, and all I can say, I really envy you because you are sitting at a golden opportunity in this country with billions of people and, with policy, innovation, capital, all converging to create the kind of impact that we want to see. So my expectation from this room is definitely that a lot of impact entrepreneurs can come, and I also see people with money. I would definitely love to see some really good impact investor coming out of Kochi that will really turn the tide. Thank you.
So good afternoon, all of you. Thank you for inviting me here. So first of all, I am a teacher. So as a teacher, I will request those who are standing there, so please occupy the front seats. So those who are standing here also. So let me explain the sustainability, or I will say summarize the sustainability what my co-panelist has said. So see, sustainability having a definition wise or interpretation wise has very significantly changed, means throughout this 100 years. So you need to understand sustainability first with the aspects of the business and with the aspects of the investors. The two things, investee and investor. Let's talk about the investee, business or the company. So if you see the sustainable business means what? Means to survive or to make a profit, to be in a long term in the business. But in the mid of the 20th century, the sustainability is become more about also a social impact, including a stakeholder, not only just a shareholder approach. Lots of debate happened when the Milton Friedman say the business is only doing the business, nothing else. You generate the profit, you pay the taxes, and the other thing, impact thing, will be done by the government only. But then the experience and the research saying that if you are integrating people, profit and planet and all the stakeholders, then it will impact the financial performance as well. Not only the profitability. See, profitability is a very short term. But if you see a wealth creation, it's a long term. And when you are integrating this ESG, environment, social and corporate governance aspects, so it is giving a more financial aspect. Now recent 1 decade, now sustainability again changes interpretation. Now when we are talking about sustainability, is more about the climate impact. How the climate change is changing the business, what you are doing, and how the business can be resilient with the climate change. Now this is about the business. Now talking about the investment side. So earlier the investment motive is only to earn the return, earn the profit. But if you see throughout the century, means especially if you read this book, Benjamin Graham book, Intelligent Investor, he is talking about picking a good company, doing a long-term investment. Basically, he was talking about the fundamental analysis and doing the investment for the business, not about the non-social aspect of the business. Then also Warren Buffett is talking about the investing long-term and all. But in Warren Buffett philosophy, he is also asked about the quality of a management, corporate governance, ethics and other things. Then coming to the recent 2-3 decades, if you are saying, so this investment side, they are saying that if you are integrating environment, social and corporate governance aspects, so it is giving you a more value creation. So this alliance, you can say that the BlackRock, the biggest asset under the management, they are saying. So they say that whenever they are taking a decision, investment decision, they will consider the financial aspect, but they will also consider the ESG aspect. So this is a evolution on two sides. So what we are talking about the impact investing. So let me give a brief about this. So see, a responsible investment is the big gamut, is the universal set. So under which the initial evolution happened with the ethical investment, means people considering theological aspects of the business, means their philosophy of investment, and then doing the investment, like Christian fund and Sharia fund, they are coming under this. So this is one initial aspect. But if you see now today, if I am standing, if you see, under the responsible investment, there is a ESG integration. Then there is a negative screening. Then there is a impact investment. Okay. So ESG integration is a bigger chunk. Means if you are saying 120 trillion of the AUM, global AUM, so the ESG AUM is stand for the money under the theme of ESG is almost a 34 trillion USD dollar. Means it's almost a 1/4. It's very significant. And the impact investment is a 1.4 trillion of this global investment. It's also a very significant one. It's almost a 1.5% of the global asset under the management. So what I will want to conclude, now the whole sustainability is moving from the stakeholder, shareholder approach to the stakeholder approach. That's all. Over to you, sir.
So this is brilliant. This is precisely what I wanted to understand, because to summarize from the investment side, Hemendra, Ananth and Emmanuel, they've talked about the business itself being sustainable and the positive impact and so on. But I think what Miraj said was something that resonates more, where he's talking about of a more circular economy, which is about wealth creation overall for generations. I think that's my key takeaway from this entire point. So coming back to the next point, which I feel is also important for the members present here, I'm pretty sure there are a lot of entrepreneurs here and investors. So this is my question to the investors. So what exactly is an entrepreneurial mindset when you think about investing in a certain startup which is working towards sustainability? Or why do you make an impact investment? What exactly is a business model that you look for? What is your profitability cycle? Because you can make chairs out of plastic, but how long will people adopt? Will people buy? And then of course, how do you evaluate these companies? So anyone, let's start off with you, Ananth.
Yeah, thanks. So I think this is a very crucial question in terms of how do we evaluate, right? So end goal, of course, as we mentioned, since we are talking about impact investment, is that whatever we are investing in, there should be a societal and environmental impact. So that I think all of us look for. But having said that, we also look for the business model to be a sound one, and the fact that it has to scale, because there is no point talking about impact unless we are talking, and I think Hemendra brought up this idea of at least 1 million people's or 1 million lives impacted. In India, that's a very small number actually. So we need to see a scalable kind of a business model which can then multiply the impact, right? But when we go deeper, what are the things, I would say, I'm talking more from Villgro's perspective now. Of course, the very critical thing is the team, right? I mean, is the team diverse? Are the founders of this enterprise, do they bring different skills, right? If all are techies, then somewhere it strikes a little bit of a warning note, right? We do want to see a mix of techies, technical skills, business skills, operational knowledge, etc. in the team, or at least those roles should be nicely kind of defined. And very important for us is how well do they understand the problem statement. See, everybody talks about the solution, right? The solution domain as we call it, but how well is the problem domain understood? Has the team identified the problem correctly, understood what the customers are willing to pay for? Okay, only then can the business model succeed. Many more, but I think I'll stop there because I'm sure we have very experienced investors on this panel. So I'll let them add their comments to that.
Anand, one thing if you can add to this, I'm sorry to interrupt you, is that how much is the passion that you look for? I mean, this is not straightforward. If I have a tech problem, I'll have a tech solution to it. If I have a finance problem, I'll have a finance solution to it. But this one, anyone can. I may be passionate about the environment. I may be passionate about waste management. So how much does passion alone play to your selection of a team? Because you said that you want a team to be diverse. People can come with a lot of talent, right? Where does that passion come in?
Passion is a very important factor. We definitely look for that. When you say passion alone, then I take one step back, because passion alone may not make the cut. It has to be, passion is something very important ingredient in the success of a business, especially in an entrepreneur's life where there are a lot of hardships, right? A lot of ups and downs. And it's only passion which will carry you through those ups and downs. It's not going to be anything else. So we do look for that, the passion, dedication, commitment. But not that alone. There has to be a sound business sense also.
Yeah, so the checklist to evaluate a sustainable product or an entrepreneur is not very different from evaluating any other business. So what's the clarity that the entrepreneur has about what he or she is planning to do is very important. The understanding of the business, is it a business that is scalable? Is it something that people will pay for? Is the entrepreneur having a deeper understanding of what he or she is trying to do? How much of effort has gone into planning for it? All these are aspects that we look at. So sustainable solutions are many, but is it a business opportunity at the same time? Is the question we keep asking ourselves. And for example, we have funded a organic food company, which is one of the largest in India. And what do they do? Sustainability in terms of reduced use of harmful inputs, sustainability of in terms of improving the health of people who consume these products. So there are many dimensions of that sustainability. And the second element that we look for is the capability to measure the claims that you make. So it's important to be able to quantify and measure the positive impact that the project or the proposal is going to make. So these are things that we look for: a scalable idea, a clarity, the ability to convert it into a business where the consumers or the users are willing to pay, and the ability to measure the outcomes of that project.
Thanks. I think lots has been already said, but my passion is more early stage investing, and typically I follow a 5C framework. The first C is commitment. If you are sort of doing it at your own money, please do as you wish. If you are raising money from third party, as an investor, I want you to die before I die. As simple as that. It sounds brutal, but this is how it is. So you should be really committed to the cause. Huh? You don't have the option of escaping or running away. That's number one. Second is chemistry. Especially in multi-founder team, I have seen a lot of challenges, how founders work together. Even in family situations, brother, father, son, I've seen a lot of challenges around chemistry. Do you understand what role each one of you is playing, right? Do you really complement each other? That becomes an extremely important factor. Third C is competence. All said and done, I'm sure in this room there'll be dozens of guys who want to build AI startups, but do you really understand what does it mean to build an AI startup, right? So I think that competence, ideally at the founder level, of course you can hire competence, and I really like founders who are open to hire people from outside. But I think as founder also, you should have competence to build a model which is scalable, sustainable, right? Fourth is clarity. I think this is so critical. A lot of my exposure is in agri-tech space, and I find 4, 5, 6 pivots happening. So I'm not against pivoting your business model, but the question is the cost of pivot. Sometimes it is months, sometimes it is years, sometimes it is $50,000, sometimes it is even $50 million. So what is that cost of learning? And unless you have clarity, it's very hard to, sort of pivot smartly. So if I'm investing in agri-tech startup, my formula is simple. How much time do you spend in villages? So investability is directly proportional to the time you're spending in village, and inversely proportional to the time you're spending on LinkedIn. Very clear. That is how, you have to be very, very sharp in figuring out what you want to do. Last but not the least, capital efficiency. I think this is one concept which kind of took the back seat when funding was soaring, especially during pandemic. It was raising $1 to build a revenue of $1 or even less. I don't think that's how it's going to work. Ultimately, capital efficiency is extremely critical. If you want to build a $100 million business, you can do it with $200 million, $100 million, $50 million, even $5 million. More efficient you are in using capital, that's how you're going to drive the sustainability of the business model. So I'll stop here.
Yeah. So before Miraj, you go into, I just want to, I got the perspective, we got the perspective of the investors and from the industry, but if you would share a little bit of light on what is the policy framework, like for example, they look for profitability, whether it's a profitable cycle or not, the 5C framework, and so on, whether it's a business or not. But from the regulatory side, what kind of policy framework do you have that you make sure that these companies or such kind of funding should be, more like good for everyone, good for the community? So what are some of those things?
Yeah. So see, whole sustainability evolution you can divide under the two regime. One is a voluntary regime, and second is a regulatory regime. Under a voluntary regime, everybody is doing by their own voluntary disclosure, voluntary asking for the investment, investors also providing without any compulsion and all. But post this 2015, Paris Agreement, when the government are pledging that we will inculcate sustainability in all our actions and all our policies. So then MCA came out with the National Voluntary Guidelines for the Responsible Business Conduct. And it pushed to regulators like SEBI and as well as the RBI to do something in this area. So right now, the very significant regulation and policy has been framed, which is shaping the whole sustainability and the impact investment, ESG rating, mutual funds, everything. So I will to name 4, especially in 2022, it is come out with the business BRSR, Business Responsibility and Sustainability Reporting. It is now mandated for the 1,000 companies. Second thing is the ESG mutual fund. So SEBI has created a new theme as a ESG mutual fund. So 2 years back, only 3 people were offering a ESG mutual fund. Now the more than 12 people are offering a ESG mutual fund. Now SEBI also has introduced ESG rating. You might have heard about the credit rating, but now it is a ESG rating also. ESG rating providers, ERP. SEBI is giving a license to them. So right now there are the 7 people, those who have registered as the rating agency. And recently in August, 16th August, SEBI has given a consulting paper for the sustainable finance. They want to develop the bond market, debt market. So there they have introduced the green bond already has been defined, but then they have introduced the other kind of the bond, like social bond, like sustainability linked bond, which is a hybrid of the social bond and a climate bond. So that they have introduced, and this is whole shaping, this regulatory aspect, whole shaping the whole economy, ecosystem and pushing. And I think it is a very, very positive thing from the regulator.
This is excellent. So we have just segued into funds and money. I think a lot of people are interested here. So it's a very straightforward question. If there is an impact startup or a sustainable startup, how should they raise money, and how does such startups, or how do startups raise money? Can you provide some tips?
Yeah, so very frankly, fundraising is never easy. It's a frustrating process. If you look at from an investor point of view, someone getting 10, 15 pitches every day, looking at 10 business plans, I think you have to really get the attention of the investor. So I think it's important to go to investors, not with an idea, I think with first of all, a proof of concept. That's extremely critical. Idea-based funding, probably, those days are gone, right? So demonstrate what you are claiming. As Emmanuel also said, there are a lot of mega claims, big claims, but demonstrate, go with data. So that's first and foremost. Secondly, of course, cold calling is always an option, and I won't rule it out. But ideally, if you go to an investor through a reference, I think that also helps a lot. That works the best, that's more efficient. Third, I think I would say some institutional sort of support through an incubator or through a program where someone third party has validated your solution, right? If it's a product-based sort of solution, some sort of scientific validation, if it's a service, supply chain solution, some validation from third party, which could be an incubator, an accelerator, things like that. So build some visibility, right? And frankly, I always say, to conclude, have 3 kind of pitches: 30 seconds, 30 minutes, and 3 hours. You meet in this kind of conference, I doubt anyone is going to spend more than 30 seconds, unlikely. So just, clarify or sort of articulate your problem and solutions so that he understands within 30 seconds. 30 minutes when you get an appointment, virtually, in person, and 3 hours when the investment team is sitting and willing to listen to your pitch. So be prepared for that. To me, articulation is as important as the business you're building. Somehow I find that lacking in a lot of entrepreneurs. They have great ideas, they're good entrepreneurs also, but they are not able to articulate properly what they're trying to solve. I'll stop here.
In fact, there's a large amount of money waiting to be invested into sustainable businesses. And the truth of the matter is there are not enough startups or enterprises who can absorb that kind of capital. So every one of the investors, they want to show that their portfolio has sustainable businesses in their portfolio. So everyone's hunting for good, sustainable solutions to take them to scale. So sustainable packaging, for example, waste reduction, improving shelf life of agricultural produce, reducing harmful inputs, reducing the carbon footprint. All of these are areas where money is waiting to be invested. So really it has to be, in my view, conversations, nothing else. An investor and a startup should not talk about give me money or I want to put money, but about what are you trying to do, and to understand with great clarity how are you going to do that. And then we can work together to invest. So the kind of money that is actually required to conceptualize and build this idea to a stage where it requires capital is where investment has to happen. Unfortunately, we want to go and pick up a ready-to-invest company. There are not too many ready-to-invest companies. There are hundreds of ideas that are waiting to be evolved, nurtured, and built to businesses, which then become investable. And that is where we think we need to work with at a very early stage, rather than trying to look and see how we can put a $1 million on somebody. If there is a company which is investable for 1 million, it would already have been invested. So that's our view.
I'll just pick one point made by Hemendra. Please do go to an incubator, spend some time with an incubator. Recent study from IIM Bangalore has shown that startups which go through a recognized incubator have double, I think if I remember right, almost 2x the chances of getting funding compared to one that does not. Okay, and the reason is simple, as he mentioned. It's because the ideas get some validation, get some stress testing, and there is a much more confidence downstream among the investors that okay, this idea makes sense. But coming back to the question of what we look for as an investable idea, many points have been covered. But again, from Villgro's perspective, one thing we do ask, or at least I will ask very probing questions to understand how well you have grasped the market, your customers, right? For example, somebody comes to us and says that, I have made a collar which fits around the neck of a cow and it will monitor the health of a cow, right? And it will tell you in terms of, its health, its breeding cycle, the milk yield, etc., etc. Great. I mean, idea, concept is great. But then we will start probing. Okay, does it work for all breeds of cow? Does it work for buffalo? Does it work where there is no network also you can get it? What if the cow goes and grazes and comes back? Will you still get the data? So until and unless I see that you have actually studied all these cases, use cases, I would not recommend an investor. And this is something very important. So please, when you go to pitch to an investor, make it clear that you have understood your market. It's not about your technology. Yes, I mean, we understand there are a lot of high tech, very intelligent technical brains in India. But how well have you understood your market? That is important.
So that's great. So what I understand is that if one of you is an entrepreneur out there thinking about a sustainable business, make sure you have a proof of concept. That is very important. You understand your market. You go through incubators. So these are some of the tips that one can use in order to, perfect your pitch to make sure there is a significant buyer out there. They're going to buy again and again and again. You have a great pitch. And of course, you go through an incubator. So with this, I just want to put a question to Dr. Miraj. Is that one side is that you find or you build a sustainable business or sustainability business. What about building a career in ESG, like from an academic perspective, because you teach? So how does one build a career with ESG as a prop?
Okay. So, I was doing my PhD in ESG integration in 2015, and since then I have seen a very massive surge in related to career related to the ESG. So of course there is a one side of the entrepreneurship, but the other side of the employability in this sector also. There was a one report by the Indeed.com. So the portal says that the surge in 2023 about the employability in the sustainability front is increased by 200%, more than 200%. And see, this area, employability, is not just impact investing, but there are the various verticals open to make a career here. It's just means disclosure front. You can become a reporting side. You can become a integrating for the investment side. You can become a entrepreneur, as we were discussing. You can become a means consultant in this area, and one thing is giving a more opportunity because there is no formal education related to the sustainability. So you will not find a means 3 or 4 year course which is dealing with the sustainability in full-fledged. So that's why the particular aspects the person has to do a capacity building by themselves. So those who want to make a career in this, so my advice is that so at least have some certificates or some education, some short-term education related to your core area, whether it is investing or sustainability entrepreneurship or related to a disclosure or rating or any other consulting field. But you need some global certification in that. And see, this is a one area where not only a costly certification is available, but also a free certification is available by United Nations. If you see going on a UNFCCC side, UNSDG side, UNPRI, so they are giving a n number of opportunities to do a free certification in the sustainability area. So I think it is a big time to make a career in this field.
Okay, thank you so much, the panel. So I'll leave it open to the audience for asking questions. So we will take 4 to 5 questions, given that we are completely done with our session. I did have one aspect that I wanted to ask the panel, if you may keep it very brief, as to how do I met many angel investors today. So how does one become an angel in a AIF that is focused only on impact? So if you could just talk very briefly about that, and then we'll start taking questions.
I think the better route is to become part of an angel syndicate. There are many Chennai Angel, Bangalore. I'm sure in Kerala also you have the angel syndicate or angel networks. I think that is a better option for an angel. AIF may be, a next step.
No, I think there are enough avenues. I think for an angel investment, of course, if you're doing in personal capacity, you can start on your own. But angel syndicate is a great idea. And if you find enough traction, convert into AIF fund. I think that's the progression.
And if you are a student, I think the best approach is that you can contact to the nearest Atal incubator center or any incubator center. So they are not only nurturing their own student, but also some quotas they have kept for the outsider also. So you can pitch first to the faculty, and then faculty give you a hand holding and giving environment, connect it to the industry so that you can raise the fund.
So the simple principle is that if you invest on your own, you will have a very small pool of capital. No, some of you may have a very large pool, but you will not be able to diversify your risk. So if you pool capital and invest into multiple companies, the chances of success increase. And that is why you need to have a fund structure which does this function. It needs to be a formal institution, even if it is not an alternate investment fund. Now in AIF, it's highly regulated in India. It's in fact over-regulated. So if you are planning to get into an AIF, it is essential that you have a decent size of fund and you have a pool of investors who are willing to invest into this fund. And trying to narrow it down to something like sustainability at this point of time, I think is not a very saleable proposition in India. You could have sustainability as a part of the fund, but you will have to have the commercial side to balance it out for returns to investors, because comparability of returns, since equity investments are higher risk, the expectation of returns are also higher. So your capacity to give back your investors decent returns is a function of not just investing into something like sustainability, which is even today is a very abstract concept. What it is still to be defined.
Sure, so we'll open the floor for questions.
Hello. Namaste, sir. My question to Miraj, sir. Could you explain some more about ESG mutual fund and its rating?
So ESG mutual funds, this is a new phenomena. The first ESG mutual fund happened by SBI, and then after Miraj and all other are doing the ESG mutual fund. So if you go into how they are selecting the company on the basis of the parameter, every mutual fund have the different methodology. But the two prominent methodology is best in class and negative screen. Best in class is basically they create a score on the basis of environment, social and corporate governance disclosures what the company is making, different companies. Those who are at the upper quartile or first 10% or 5%, then they choose them in addition to the financial performance in their portfolio. So this is a best in class. Then second philosophy of investment is negative screening. You are avoiding those companies who are in a business of a tobacco, who are a business of the weapon, those who are a business of the any other which are not ethical as per their philosophy. So these are the two, you are finding these two into the mutual fund, or most of the mutual fund methodology.
Good afternoon. So my name is Archana. So I come from a startup company and definitely we are raising funds. So anyone can answer my question. Should we go for debts or equity while raising funds? Or a mixture of both?
Great question. I'm very happy you asked for it because many times equity money get used for the debt purposes. So this is great if you have clarity where to use equity, where to use debt. Typically, if you need working capital, then I think debt is a good solution because it's in day-to-day running businesses and funding your debtors, creditors, inventory, etc. I think equity capital is most suitable for new product development, team building, building tech, the kind of expenses that you need to incur, at the to build your business model. But if there are more working capital requirements, ideally it should be debt funded. So
what do you refer most? It's a bootstrap company. So when we go for debts, people ask us, ki your equity has not been diluted yet. So how can we take that risk?
So of course, I'm not saying that is easy, but let's say government has this Mudra scheme, which you get collateral-free loan up to 2 crores, if I'm correct. So maybe you approach banks or some of these. I think most of the large banks do have a startup sort of portfolio now. So maybe you need to hit the right teams and figure it out for yourself. But the best thing about that is that you delay your dilution or you optimize your dilution, which could be,
Yeah, I just wanted to add, because we work with a lot of early stage startups. The Government of India schemes, there are many of them. Please look at them. For example, Startup India Seed Fund. If your startup is less than 2 years old, you can get loan up to 50 lakhs with a 5% interest rate. Or also some of the agencies are offering it as a convertible note, right? So these are some of the options. I mean, where convertible note is a good option, where it is kind of a hybrid between equity and debt, right? Where you are taking it as a loan, okay, which can be paid back, but which can also be converted. So there are options. I mean, and particularly Government of India scheme, depending on which sector you are working in, there are lots. In fact, you could even raise grants when you're early stage for, when you're creating your product.
Yeah, ours is an EV infrastructure company.
Absolutely. Yeah, so you can definitely get, Startup India Seed Fund. How old is the company?
Years. 3 years.
3 years, okay.
Last year it was 17 crores of turnover in profit. Happily.
I think then you don't have to think twice. I'm sure you can get from anybody in this table itself. So,
thank you, sir.
Yeah, so we have a NBFC called Caspian Debt, which looks at companies like yours. Equity at a very early stage you dilute, you don't get the valuation. You become a employee of the investor.
That is true.
That is why you should not.
Yeah, when Zomato went to IPO, there are no promoters at all.
Yeah.
So that's what mini startup like us, I believe some of you at least here, are scared to dilute equity at the early stage.
You should not. Because if you believe in your company, you need to hold the majority stake.
That's where we become a little bit stingy. How much we should be diluting? Is it the right amount? And as you said, incubators play a very great role advising us at this stage how much should be paid. And for example, I'm taking this, you can explain it as a case study to our company's 170 crore valuation. We are asking for 80 crores as an investment. So people are asking, will you give more than half of your shares to others? Your idea is good promoters, good people are there, good system, everything is good enough. So when funds are coming in, people does not know how to manage it.
So let me conclude. The audience is diverse and the question is specific. You should borrow debt when you have good margins in the business, when you have a good market, and you have clarity in cash flows, right? So cash flows is a very important thing. Sales is one thing, but getting cash in. If you have these three right, debt is the perfect solution for it. We can have a conversation outside here.
I'd just like to add to that thing is that in your stage, I don't think you should go for the government schemes because you said that you want to raise 80 CR, which is a large amount. I mean, and none of the government funds have those. So I have a very small portfolio of early stage startups, and the funds that I propose to them, which are equity free, are something. If you're building a product which is not software, like if you like something hardware, then Nidhi Prayas is a good option. That is one. It is an equity-free grant of up to 10 lakhs. That is one. Secondly, I just recently spoke with Meiti, and I know the program director, who spoke about this fund called the Genesis Fund, which is, let's say you have built some amount of a prototype, and then you want to take the next prototype to the pilot level. So they have up to 40 lakhs or 50 lakhs of equity-free grant. So this is equity-free, which means the government that doesn't take equity. SISFS, as Ananth has mentioned, which is seed fund, they work on an equity basis and is funneled via incubators. The government does not give you that money. And all of these funds are, by the way, funneled via incubators, which is like Dr. Miraj has mentioned, Atal incubation, right? So that's one of the vehicles that they will evaluate, and they have the due diligence and all of that. So that's again equity free. Meiti also has funds like Samrid, which is like they fund you, they either as a CCD, which is a convertible debenture, and then you also have to raise an equal amount from the open market. So those are some of the things that you want to kind of, but in your case, I think a conversation with Emmanuel will be a better idea. There are no questions. I had one last question to sum it up. What are some of the success stories that you want to talk about, like people that you have invested in who have been successful?
Oh, there are many success and many failure, to be honest. Every success has a failure. Many, so I don't know which one to select. So of course, maybe one startup which is done great on sustainability as well as on commercial sort of orientation. A startup called S4S Technologies out of Aurangabad. 7 founders, ICT Mumbai. Started with a dehydration solution. Didn't work. Kept on working on it. Then they realized that if they have to sell dehydrators, they have to ensure availability of raw material, and they have to give buyback assurance. So that's where some of their machines started selling. It still didn't scale. Then they realized, since this cost about $1 lakh or 2 lakh, it also needs financing, and none of the banks was willing to finance a machine of 1 lakh, 2 lakhs. They went to a cooperative bank and somehow got financing at 15%. So they moved from 100 to 500 dehydrators. Suddenly SBI figured them out and said, oh, guys, you are qualified under Agri Infra Fund. And the cost of funding to these micro entrepreneurs came down to 5%. And that really changed the trajectory. So combination of market linkage, financing. But the impact part is all these micro entrepreneurs are women, all of them sitting in small villages, earning about 7 to 15,000 rupees a month, sitting at home. Creating value, improving shelf life, it's solar dehydration, so the nutritious value of food is preserved. It goes into secondary processing, gets sold to likes of Marico, Nestle, Capital Foods. So fantastic case of value chain integration. About 250 crores in turnover from one cluster. That's it, and phenomenal amount of impact on the ground, and a commercial success story invested by Excel, Chirate, and best of the funds are looking to invest in them.
Yeah, so as they say, success is never final. So you cannot say that somebody may come with some new technology tomorrow and you're done. The second thing about success is the success belongs to the entrepreneur. We just put the capital behind the best guys. So we can't take a lot of the credit that actually belongs to somebody else. The third indicator of success, again, I think, which you need to remember is the track record of these investors. You know, where they have invested, where did they take that company to, and did they return the capital to the investor from whom they took the money? And in that sense, looking back, of course, I didn't bring my PowerPoint, it's not the place, but we have a record of investing into companies in our funds and exiting 100% of those companies through acquisitions, through IPOs and secondary sales, and returning the entire capital to the investor, which is a record which very, very few funds have in this country. And going back again, we have been largely in the microfinance space, and large companies like even Ujjivan Small Finance Bank, other ones, Equitas, we have been investors into some of the largest companies which have gone on to become banks, got listed on the stock exchange, or got acquired by banks. So one of the NBFCs we invested became a wholly owned subsidiary of Kotak Mahindra Bank. So these are the successes, being able to build businesses to scale and then exit them at rates of return which are attractive to the investors that you promised and raised money from. This is the whole success story that an AIF should have.
Actually, we have a question from this side. Yes, please.
Hi everyone, I'm Dr. Ashna, Director of Futurize Hospital located in Ernakulam. Actually, we are a unique healthcare startup. It's a boutique hospital. So we started as a 25-bedded hospital. Now we are looking for an expansion to 100 beds. So our requirement is a 150 CR project. Whether it will be good to look for angel funding or VC funding, can you give a clarity on that? Thank you.
Given the quantum of your requirement, I don't think it's an angel funding. Angels, I don't know, typically 10 lakhs, 50 lakhs, crore, 5 crores, maybe $1 million, but I doubt angels who can invest beyond 50 crores or even 10 crores. There may be some, but maybe I don't know. I think to me, your funding is more CAPEX project-based funding. So, of course, you can raise some equity either from a private equity fund if you want to build a chain of hospitals, etc. That's one option. Or I think if you have a good track record, a good credit rating, you can even raise debt for it. I won't be surprised. So to me, debt is also a solution.
Thank you.
So there's been a lot of PE funding that has come into the hospital sector recently. So it's really a hot space that everyone's looking to invest in. The word boutique is the key here. 150 crore is a pretty large amount, so that's why you need to go to institutional investors. And as Hemendra was saying, you need to blend debt and equity to get the right combination to get this business going. And that is the way it is.
All right, thank you so much, the dignitaries of the panel. I would like to close this session now. It has been a very heady discussion, and I learned a lot. I'm sure the audience here has learned a lot as well. Thank you, panelists.
I'd like to give a big thanks to Zeeshan as well. He came in very late and he was able to really put this panel together. So sincere thanks to you as well.
Thank you so much to all of you for such an enlightening session on the role of impact investing and sustainability in the Indian financial markets. It was absolutely delightful. Can we kindly please give a big round of applause to all these 5 wonderful speakers who have been so kind to enlighten us on the topic. And also may I humbly request you to kindly accept a token of love from our end, from the Money Conclave 2024. May I now humbly request Mr. Madhavan Ramakrishnan, the very venerable founder of TechFrail, to kindly join with us. and kindly express our love and gratitude to Mr. Ananth Aravamudan. Please, sir, kindly join with us. Thank you. And thank you so much, sir, for highlighting the fact that you have to know your market very well before pitching. That was one of a very important tip that we could take away today from Money Conclave 2024. Can you kindly have a big round of applause? Yes, let us show our appreciation for the wisdom they have passed on. And Mr. Madhavan may also humbly request you to kindly hand over the souvenir to Mr. Dr. Mohd Miraj Inamdar as well, please. Thank you so much, Doctor, for highlighting the responsible and the ethical investing. Thank you so much, Mr. Madhavan. You may now kindly take back your seats. It was so great to have you here. And now may I humbly request the illustrious co-founder of Conclave Ventures, Mr. Emmanuel Murray, to kindly join with us. Sorry, Mr. Vineet Mohan, kindly join with us to kindly hand over the token of appreciation to Mr. Emmanuel Murray. I deeply apologize for the confusion caused. Thank you so much, Mr. Vineet. You may now kindly take back your seat. And now let us have on the stage. Yes, sir, you may now kindly take back your seats. Thank you so much. And yes, now let us invite onto the stage a very graceful founding member of the Money Conclave 2024, Ms. Nasreen Midlaj. Can we kindly have you, ma'am? Kindly, please join with us to express our gratitude to Mr. Hemendra Mathur, who has very graciously encouraged the youngsters to take up the route of impact investing. Thank you so much, Nasreen ma'am. And finally, borrowing words, for having put up this panel so very beautifully and so very effectively in the last few minutes he had in his hand. Let us express our gratitude to Mr. Zeeshan Nofil, and may I humbly request Mr. Farik Naushad, yet another founding member of Money Conclave, to join with us. Thank you so much for that seamless transition through all the contents, and it was definitely one of the best integrating session we had tonight. Thank you, Mr. Farik. You may now kindly take back your seats. And yes, may I humbly request all of you to kindly join together for a group photograph. Let us immortalize the beautiful moments of the Money Conclave 2024. And may I once again very humbly encourage each one of you to kindly put your hands together and show our deepest gratitude for having brought the role of sustainability and impact in investing in financial market so interestingly.